Hi, let's talk today about improving deal structure and deal flow in B2B sales. With every post that I make, I really want to help companies and individuals actualize their fullest potential and to do it swiftly. So let me get right to it. I want to talk today, the format here will be defining some terms, talking about challenges companies face with deal structure and deal flow, and then finally some suggested solution. What I'm going to suggest with the solution is actually a process that your company can undertake to help you identify and purge problems, but also implement really positive change fast. So let's move into the defined terms. The first one is B2B, that refers to business to business. Deal structure is whatever it is that your company is offering to the marketplace. Products, services, tech, software as a service, that mix that your company is offering to the marketplace. That's the deal structure we're talking about. Deal flow, that is not referring to lead generation itself. It's referring to everything that happens after the lead's generated. Pre-sales, sales, negotiations, deal being struck, deal being implemented, relationship being managed, and hopefully even relationship being evolved over time, expanded. So those are the defined terms, just three of them, the B2B and then deal structure and deal flow. Now I'll move into what I've perceived as challenges companies face when it comes to deal structure and deal flow. And this is based upon 20 years of experience operating as an international business developer, business lawyer, and negotiator, often helping companies close deals with market-leading counterparties in Asia, Europe, and North America, sometimes the Middle East as well. So, what are these challenges? Well, what I've seen, and I'll just run through these kind of quickly, but you can ask yourself if they resonate with your experience. Not disqualifying bad deals fast enough. Just deals are pursued and resources are expended when they shouldn't have been, because resources are finite and you have to really prioritize focusing energy and time and other resources on viable deals that are good for the company. The other is, let's say that a prospect is sufficiently qualified. What I've seen, and this is a huge issue for a lot of sales organizations, is that they give the prospect or customer too much power in controlling what the offering is. The offering that is product driven suddenly is treated more like a service, for instance, and it's priced accordingly as if it's a service, so there's not recurring revenue that would otherwise apply, like royalty or licensing fees from an actual product. The monetization is adversely impacted because the prospect or the customer is able to negotiate price too effectively against the selling organization. Also, the risk profile, somehow the risk is pushed repeatedly over to the sales organization at the expense of the sales organization's upside. So the sales organization, in those contexts, it becomes somewhat like an insurance company, not a sales organization. So I've talked about a few things here, maybe a bit too broadly, but it's the lack of monetizing effectively, the lack of having a scalable business model because prospects are controlling the business too much. Also, the risk profile is getting too high on the sales organization. I've seen other challenges as well, and this is when it comes into the deal flow. There's a lot of stakeholders at companies, especially in complex B2B sales. These can be on the technical side, the legal side, the financial side, the marketing side, the branding side, human resources side, the procurement side. There's a lot of different players, and in my experience, these people at companies tend to be highly qualified. The challenge is not whether or not people are sufficiently qualified. The challenge is how these people mesh together. Are they creating a synergistic outcome that is reflected in the ultimate deal? And generally speaking, in my experience, by a long shot, it's no. People's individual contributions are sometimes missed, or they're just not complementary to one another effectively. And so the ultimate deal doesn't reflect that collective competence of the key stakeholders at the organization, which results in insufficient monetization, too much risk. It also results in a frustration of the staff. They see the ultimate deal doesn't reflect their contribution, and this creates a kind of spiral of friction at organizations. And this adverse impact on morale can absolutely be improved by having a good deal flow process in place. So what's the solution? to this. It's one thing to raise a bunch of problems, but it's another to talk about a pragmatic solution. Well, I think there's 4 things that companies can readily look at and can audit and then improve in order to get really good results fast in B2B sales. So these 4 things, I liken them to the wheels on a car. That corporate vehicle, it's going to have a trajectory, a speed, a resource consumption that is going to be largely contingent upon the effectiveness of these 4 wheels. So the 4 wheels are rules and tools. What are the rules and tools that your company is using to assist staff members in being able to manage the process of deal flow and to identify this deal structure clearly enough? The next is pre-sales and sales. What is happening during the pre-sales and sales process? Who's responsible for what? How are things being communicated? How are things not being communicated that shouldn't be communicated? This is a big issue when it comes to communication. If inconsistent messages go out, the customers and prospects always cherry pick. They take the best and they leave the rest. So you need to have a clear communication protocol in complex B2B sales. Otherwise, you will be defeated time and time again by savvy customers who know how to get inconsistent information and then rely upon it to your detriment. So we talked about rules and tools, pre-sales and sales, and negotiations, and then finally deal management and relationship management. By looking at these 4 individual things and going granular on each of them, rules and tools, you should have a repository where all your contracts are. There should be instructions with regard to contracts. There should be term sheets. There should be metrics for how pricing is calculated. There should also be very clear guidelines on where to start when it comes to term sheets and contracts, so that they don't reflect your bottom line positions, but they reflect the starting point that is necessary to achieve a win-win outcome, not a win-lose, where your company ends up having to go and forego reasonable monetization and accept unreasonable levels of risk. Then in the pre-sales and sales process, what's happening during that period? When is the NDA given? Whose NDA? When is it reviewed? Term sheets, when? What is the timing of the term sheets being given to the customer, the prospect, or the proposal? Who gives it? Who drafts it? Who approves it? Who can influence it? How do we ensure that all the stakeholders are reflected even at the stage of the term sheet, so that the ultimate contract reflects terms that are necessary to achieve a really good deal? Next, we have the negotiations. You have to ask yourself, at the negotiation phase, has your company inherited strengths or weaknesses from the earlier phases? It's very important to have processes in place that ensure that there's a seamlessness. There's some of the same people are involved along the process, but also there is a proposal that has gone out that is consistent with the term sheet that was approved, and the agreement is therefore consistent with the term sheet. And all of these are positioning your company in an effective way so that you can achieve a very good outcome at the negotiation. And then ultimately, deal and relationship management. So earlier on in a good pre-sales and sales and negotiations phase, you would be looking at how to expand the deal from not just being a mere transaction, but to a solution. You're upselling, you're expanding, finding enhanced value. But then also this happens as the deal is closed. Similarly, just as you had groups of people responsible for different aspects of closing the deal, you'll have different individuals responsible for implementing a deal. But also what should be included in that process are clear processes for upselling after the deal is made, for creeping in the target organization so that you can move into other business verticals and sell in other products and services. But finally, in this overall, these 4 different pillars that you're looking at, once again, rules and tools, pre-sales and sales, negotiations, and then deal and relationship management. In that deal and relationship management, you should also have something called the debriefing function, where your company is debriefing, perhaps quarterly, its relationships with key customers, but also looking at what has been working and not working with regard to closing deals with prospects. This process of auditing deal structure and deal flow should be done in an abbreviated way quarterly, but then in a large scale way annually, to ensure that your company is becoming increasingly effective over time. Okay, so I hope I made my case here a little bit for the effectiveness and the utility of deal structure and deal flow audits. And your company probably possesses the capacity to do this very effectively. A question is, will it actually get done in your organization? Do the existing staff members have the time to actually put into one more project of this scale? I offer a service for coming into a company, reviewing readily the contracts that are being used, term sheets, doing some basic interviews, and then mapping out suggestions for improving rules and tools, pre-sales and sales, negotiations, and deal and relationship management, and then helping with the implementation, and then coming back and doing a follow-up workshop to ascertain how successful has this been, what are the measurable results. If you feel like you would like some help from me, please feel free to reach out, and I wish you all the best with your deal structure and your deal flow, and take care of yourself, especially during these interesting times.